Trade like a gladiator. At Chaikin Analytics, I am our Director of Client Success. I'm going to tell you a little more about that in just a moment, but I just want to express how excited I am to deliver this presentation. You know, I was given the idea by our marketing director to, give a unique approach, and so I definitely want to bring my personality, my own approach to investing into this presentation. And so when they told me they wanted to do a gladiator-themed presentation, it couldn't match my personality more. Gladiator is one of my favorite movies. There's so much inspiration to take from that, and I think you're going to see how we can relate to that when it comes to investing. So as mentioned, my career has been centered on financial education, all right? So Director of Client Success. So what does that mean? So at Chaikin, my main responsibility is to ensure that our clients maximize the value of our product. All right, as Reed mentioned, I have worked with and consulted with thousands of different individual investors, whether it's individuals who are just managing their own portfolios, or whether it's professional money managers and RIAs. I've had the opportunity to meet with thousands of different perspectives and insights and different goals between my time at Chaikin Analytics as well as at the Vanguard Group. Now, when it comes to investing, one of my strongest beliefs is that you need a strategy. All right, you need to have a certain approach to the broader market. All right, now investing is not like going to a casino. All right, you can put the odds in your favor. What we're going to talk about today, as you can see in this testimonial here, we're going to focus on probabilities and positioning. All right, so as you can see, I had an attendee from one of my boot camp sessions. All right, it's a session, the opportunity where you sign up for Chaikin Analytics, and we give you a full, thorough 2-day overview of Chaikin Analytics. And here's the reaction from one of my subscribers, and I'd love that he related it back to a sport, especially baseball. So if you think about it, if you are sports fans, ultimately you can give yourself a better chance of success by making certain decisions. All right. Now, we all know there's no guarantees in the market, okay? If anybody ever offers you a guaranteed return, they must be, there's something false, all right, behind that message, okay? So rather, the way that you can have success in the market is by positioning yourself. Now, how do we do this? Well, as you can see in the image on the right-hand side of the page here, what we've developed are our power gauge ratings, our Chaikin power gauge ratings. Plenty more about this to come in just a moment. I have pictured here the 9 sectors that we follow along with the S&P 500, and as you can see, based on the color balances here, and again, more details to come on this, but you can see the balance of the number in green, yellow, and red, bullish, neutral, and bearish. So if we're thinking bullishly on the market, well, instead of taking a shot at one of the probably 80 to 90 bullish stocks in the S&P 500, why not focus on one of the stronger groups where you see a greater allocation of bullish stocks? Now, we're also going to talk about, of course, options trades. So, of course, where you can profit from the market as it depreciates. Well, we're also going to focus on, in a bearish market, the most bearish stocks and the most bearish industry groups. All right, so this is just an illustration, all right, a taste of our approach when it comes to investing, okay? So, why a strategy? What I want you to do, go ahead and chat in real quick. I'm going to explain a situation. I want you to know, I want to know if this relates to you. So tell me if you've ever, let's see, you're looking for a new stock to invest in, right? So you're searching through and you find a stock that's performing really well. You're looking at different indicators, whether it's Chaikin money flow, whether it's performance versus the long-term average that you may use. And so you see strong performance and you make the decision to buy a stock. Now, what happens after you make that decision? Almost as if just because you bought the stock, the value plummets. Tell me if you've had that experience where you just can't come up with any rational experience for why the value went down so far. Well, what we call that situation is chasing growth. So what we're going to spend our time on, one of the benefits of following a strategy is you're going to be able to identify an ideal entry point to prevent yourself from chasing growth. Now, a key lesson to learn. Now, getting into a stock, finding the right stock is important, but one of the most important things to keep in mind is that you're never profitable. You're not profitable until you exit a stock. So what we'll do today is we're going to review not just how to analyze the market as well as a variety of stocks, but your entry points as well as your exit points to secure your profits. So we're going to jump in and we're going to establish a step-by-step strategy. We're going to start with the overall market because this gives us the opportunity to make a well-informed decision. It's so important to know the environment that you're trading in, okay? Now, once we understand whether the broader market is bullish or bearish, we'll then have an understanding for whether to think bullishly or bearishly as we analyze different stocks and ETFs. All right, you can have the best strategy in the world for identifying entry points and exit points, but if you don't have the right stock, if the condition of the stock is not clearly bullish or bearish, you're exposing yourself to unnecessary risk. Okay, again, there's always going to be an element of risk. Our goal here is to help mitigate that risk and position ourselves for the best possible success. Once we have our stocks, we're going to jump in and identify entry points. So I'm going to go in detail about what I mean as an entry point. And then, of course, we're going to slay the beast. We're going to go ahead and take our profits. We're going to exit, and then we're going to find the next opportunity. All right. So we're going to review a variety of strategies today, whether you're just simply buying and holding for the long term, whether you're swing trading options. We're going to review what entry points and exit points look like for each of those scenarios. Now let's talk about support. Again, my role here at Chaikin Analytics is Director of Client Success, so I can tell you all about the support that we provide. When you subscribe to Chaikin Analytics, not only will you have our platform for research, but you'll have the opportunity to sit in a variety of different small group sessions. Now, why small group sessions? Why not individual sessions? Well, the key to learning is from your peers, so peer group learning sessions, okay? I find myself holding one-on-one sessions with a lot of subscribers, and certainly it's important in certain situations, but I can't help but think that some of the questions that people ask, there are other investors out there who can benefit from the thought process, from the questions that are being asked. So we have a variety of different themes, as well as plenty of other material. What you're seeing here is what I affectionately refer to as our blueprint for success. All right, this is our Finding Long and Short Ideas article. Much of what we're going to talk about today is based on these different profiles for what we define to be a classic bull, a classic bear, and then most importantly, a turnaround. You know, how do we find a classic bull before it's actually classically bullish? All right, so we have a whole variety of ways where you can find these opportunities. Now, I'd like you to chat in again. I saw a great number of responses for the first question I posed out there, but I want you to chat in, and I need to hear two different responses from you. Tell me what you're primarily focused on trading. All right. Tell me if you're primarily focused on buying and holding, if you're trading options, if you're just looking to, looking for calls, puts, or spreads, or any variety of different trades, or maybe you're just looking for a reliable dividend return. Maybe you're just looking for income. And then the key is, tell me over how long of a time frame. Are you ideally looking to be in and out of a trade within 1 to 3 weeks? Are you focused a little bit longer, 1 to 6 months? Or we call that intermediate term. Or tell me also if you're just simply enough looking for a longer term trade. Now the key to note here, obviously we can help with any variation of these 3 strategies and time frames. Okay, so I'm just going to take a moment real quick and I'm going to see what kind of responses we get in here. I'm seeing mostly swing trading, very good, and options. Awesome. All right, great. So what we're going to jump into, obviously just for scale, we're going to talk about some of those longer term entries, those longer term exits, as well as the swing trades, because I think even if you're not taking longer term trades, it's important to have another perspective to compare and contrast against. So I want to make sure that we can differentiate between a longer term position as well as a shorter term swing trade. So without further ado, enough talk. Let's go ahead and jump right into the arena. So bear with me for just a moment. We're going to switch over and pull up Chaikin Analytics right now. All right, so I'm expecting that you're able to see my platform. Go ahead and just type in the letter Y. Tell me if you can see my Chaikin Analytics screen right now, and then we'll go ahead and jump in and get started. So I'm seeing a lot of positive responses, so let's go ahead and get started then. As I mentioned, where do we begin each day? Well, before we look at an individual stock, before we even look at your portfolio, we've got to get a sense for the broader market, okay? Anticipating growth over the next week or so, here's the thing. You can find stocks that are likely to rise, but the key to making money here is to what degree of growth, okay? If you can imagine, if you're looking for a bullish trade, you're probably likely to see more volatility, a greater swing if it's a bullish stock, bullish industry group, bullish market, okay? Now, we like to think of the broader market pretty much equivalent to the rising tide, okay? So a rising tide lifts all boats. Well, a bullish market, you see a lot of stocks performing well. All right, think about the difference between over the past 4 years, 2011, 12, 13, 14. 2015 has been an entirely different year. All right, 2015 has been a challenge. Okay, so now more than ever, you need these resources, a clear window as to what's taking place in the broader market. So we're going to start real quick with the S&P 500, just to kind of keep it basic for now. So as you can see, we do analyze both individual stocks as well as ETFs. Now, for the program here, we're going to talk about all of our different indications. We do use a 12-month as well as a 5-year chart. What we're seeing right now is a 12-month. And then, of course, our long-term average is a 200-day exponential moving average. And obviously, these green bars are representing a single day's trading range. So we're going to talk more about this when we get into individual stocks. But again, right now, we're not necessarily interested in trading the SPY. All right. Some of you may be trading the indices, and you're more than welcome to do that. But right now, again, we're researching. All right. We're educating ourselves. We're getting a sense for what kind of environment we're in. So with the S&P 500, obviously, we've had a pretty short trading range for 2015. All right, up until, of course, August, where we saw a pretty significant breakdown. Now, we've been seeing the price rebound off of the long-term average here. If you're familiar with our RSI, or overbought, oversold indication, you can see that each time the price has reached a long-term average, the broader market has been overbought. And you can identify at least the short-term swing or the short-term bottom by noticing when the broader market is oversold. All right, so go ahead and match these up. And ultimately, by using the broader market, we're going to identify whether it's a good time to be buying our calls, and then ultimately when we should be closing them out. And then we're going to pivot, identify when we should be buying puts, when we should be shorting the market, okay? When we're reaching our peak points here, and ultimately when we're overbought. Now, how did our program help us out with the month of August? Now, a quick story. I spoke with a subscriber. He'd been with us he attended actually that same boot camp session from the prior testimonial, a different subscriber though. And so it's the end of August, and so obviously we saw an 11% correction. And when I'm fielding phone calls from subscribers, it's going to be feast or famine. Either I'm getting killed out there, or I'm really cashing in. In this case, this gentleman was cashing in. He noticed that the broader market stopped making its brief higher high, eventually plateaued, and then he saw that the market eventually started making a lower high, a lower low. What did he do as a reaction? He went out and placed puts. Okay, this gentleman was trading tens of thousands of dollars in his capital account at the beginning of the month. By going bearishly on the market, as well as underlying stocks, he said by the half of the month, by midway through, he was up 50% in his whole trading account. After we saw the breakdown, he was up 110%. Now, this is a lesson for knowing your environment, okay? You could very well identify an oversold position here, all right? And you can expect growth. But what is the context for a shorter term trade, a swing trade in a broader, more bearishly market? Okay, that's the lesson we want to take away here. Now, we've seen this W-shaped bottom in the market. Why is this meaningful? Why is this important? Well, with Chaikin Analytics, you're getting the 1-2 punch that you need, okay? In addition to Chaikin, obviously the platform here, we also have our Chaikin Insights articles, all right? Mark Chaikin, a 50-year veteran. This is his 50th year investing, all right? 50 years on Wall Street. This whole program is his life's work, okay? What you'll receive, obviously, is commentary, right from Mark Chaikin on a weekly basis. Every Sunday afternoon, he provides analysis on the broader market, and as you can see here. And what I've done, I went ahead and I've actually pulled up his article from September 20th. All right, let's go ahead and identify September 20th here on the page. So I'm just going to simply enough pull up my crosshair, and I'm going to go right to I guess we'll have to go to the 19th. We'll go to the 18th, obviously, since the 20th was a Sunday. So here we are in the broader market. You can see this V-shaped pattern presenting itself. Now again, why is this significant? Why do we need to pay attention to this? Well, obviously, if you think back about 2 months, there's an overwhelming amount of uncertainty in the market. Overwhelming. Okay, we had subscribers calling in. I just can't make sense of this market. I'm going out there and I'm following different signals, and it's just not working out for me. The key that we're missing, all right, the key that an investor in that kind of position is missing is understanding the environment. By going through market insights back here on September 20th, now there's plenty of content that Mark is providing to back his outlook on the market. What I'm going to do, obviously, since we only have so much time, I'm going to skip right down to this very convenient summary that he provided. And I want you to read through some of these bullet points, okay? Now note first, if the above analysis is correct, all right, so this is suggesting, obviously, that Mark, look, he's using data, he's using analysis to make his prediction for what to anticipate from the market going forward. Bull market is intact. Market needs to test the August panic lows of 1867. Likely to take place in late September, early October. Volatility likely to continue. Be prepared for it. That's a key lesson here, all right? I would love for growth to take the shape of a straight nation, all right? Kind of like a forward slash on your keyboard. I would love it. Fact of the matter is that that's not the environment we're in. Now you're at an advantage because you know volatility is going to be part of the game here. So knowing this ahead of time, you can position yourself properly. And then obviously we can go forward and we can expect a strong rally from the lows in October throughout the remaining fourth quarter. What have we seen since the 20th? Let's go and put our indication back on. Well, in commentary that Mark's provided, we're looking for the shape of a W. All right, 11% correction and greater over the past, I believe, decade. They've ended in the shape of a W. Typically a panic sell-off and then institutions selling off. All right, what have we seen since this point? You can see ultimately a retest of those August lows. All right, happening when? Now, where's our opportunity? You can see the market's oversold, and we see that next leg of the W shape. Plenty more on this to come. Now, in addition to market insights, in addition to the S&P 500, I'm sure some of you are probably using the IWV, IWM, IWB, the Qs, DJIA. All of this is available right within Chaikin. Simply enough, you can switch the major indice that you want to view, the real-time price. Obviously, the prices you're seeing right now are as of the close of yesterday's market. But notice how we have a few of these major indices. If you wanted to pull up, again, the Russell 3000, go ahead and type in IWV. And you can see the chart here. As well, let's say the IWB. Let's say the 1000, for example. And here it is. Okay. So all of these indices are available to you. Ultimately, you can pick and choose whatever index you want to view. Rather, it's the analysis. It's the factors that we want you to pay attention to that should drive your decision making. Okay. So with that said, now that we have a better understanding of the market, let's go ahead and pull up the S&P again. So based on Mark's commentary, based on what we're seeing here with institutional money, Chaikin money flow, again, larger institutions buying a stock, an index, you can see there's plenty of growth taking place. Now, we see that the market is overbought right now. But again, think back, all right? How did we know that the market is going to be mostly bullish? Well, we saw plenty of information, plenty of detail that Mark Chaikin is providing to us. So going forward, we can expect the growth without much of a decline. Okay? So with that said, let's go ahead and talk about some individual stocks here. All right. What I want you to do, I want you to picture some of the more common household names. Okay? Think about Apple, GM, JP Morgan, just a few that I just happen to ring off. Well, with Chaikin Analytics, our program's about, again, helping you find the strongest stocks in the strongest industry, the strongest market, as well as the weakest ones in a weak market. Well, we have plenty of strategies that we use to help find these stocks. Today, we're going to showcase one of the greatest upgrades that we've seen to the program. You know, I've been with Chaikin Analytics for a year now. All right, and we've made a lot of changes. I'm going to show you a preview of some of the ones that we have coming up soon. But ultimately, hands down, my favorite is what we describe here as our classic bulls, classic bears, and then of course our bullish and bearish turnarounds, all right? Bullish turnarounds are those stocks that are starting to show signs of a potential classic bull. And then of course, bearish turnarounds, those that are on the verge of breaking down and perhaps a classic bear. Let's think bullishly. Let's go ahead and take a look here. So what are we seeing on our page? Obviously, we have a whole variety of different industry groups, different ETFs that we manage and maintain for you. These Chaikin hot lists, all of these here, as you see, are lists that we automatically manage for you, okay? So let's talk about, again, the profile of a classic bull. As you can see on display, our power gauge rating. It all starts here with the stock. Where is the value of Chaikin Analytics coming to play? It's right within our power gauge rating. It's a 20-factor model. It's a blend of technicals and fundamentals. Now, the beauty here, we have the overall rating. You have 4 main categories. Underneath each, we have ratings for 5 subcategories. Now, you might be thinking, well, how do I make sense of a stock that has financials or has a neutral rating, but earnings are bullish? Technicals are neutral, experts are bullish. Let the power gauge rating do the work for you. Again, Mark Chaikin, a 50-year veteran of Wall Street. This is his life's work, all right? The rating does not modify. When you go from all throughout these different stocks, we're looking at those same 20 factors, and we're measuring those same factors and balancing them the same way. Now, the key here is that we want you to use the power gauge rating for a stock to lead your stock analysis, your stock selection process. When talking to new subscribers, without a doubt, one of the most common challenges, they tell me when they come and they join Chaikin Analytics, they say, look, I'm having a problem finding the right stocks, okay? You've got to qualify the stock, and we're going to use these different technical indicators, okay? But it all starts right here with the overall power gauge rating, all right? Now, our power gauge ratings are updated on a nightly basis. So the key here is consistency. We're looking at these classic bulls because I want you to understand the benchmark, all right? I want you to get a sense for what is an ideally bullish stock and what does it look like. Well, we can see the history of the power gauge rating down here at the bottom, all right? Pretty simple. Anytime you see green, the stock had been bullish. Yellow, it was neutral. And as you can see in this page, there's no red. So what does that tell you? Over the past 12 months, we had not been bearish on this stock. By the way, what's the stock we're looking at here? American Woodmark. All right. Tell me if you're familiar with the stock American Woodmark. All right. The stock, the company, what they do. Honestly, before Chaikin Analytics, I had never heard of them. Okay. The key here that we need to remember, we're all here to make money in the market. Okay. That's it. There's no more details that we need to go into. We're here to make money. Okay, it's as simple as that. I know it might sound a little cold, but it's the fact of the matter, okay? So whether it's a stock we're familiar with, whether it is Apple, whether it's Tesla, whether it's Amazon, that's great that we're all familiar with these stocks and we've heard of them, but the key here is what are the stocks that are going to help me make money, okay? And that's the whole basis for the power gauge rating. So as you can see here, let's go ahead and point out some of the factors on our page. At the bottom, again, overwhelmingly bullish power gauge rating for this stock here. The price has been overwhelmingly above the long-term average. All right, remember, 200-day average represented by this orange line. All right, these 2 factors are crucial when you qualify a stock. Let's not even focus on money flow over bought and relative strength for now. Just focus on those 2 factors, Chaikin power gauge rating and the price versus the long-term average. I'm going to go ahead and flip through each of these stocks. You can see just how easy it is. Just simply, I'm using the up and down arrows on my keyboard. Bullish power gauge rating, price above long-term average. There's a discipline here. All right, remember, we're following a strategy. Are we taking a flyer on any of these consistently neutral stocks? Absolutely not. Remember, we're always taking risk. The key to your success is about mitigating that risk. All right. Now, think about, obviously, from a longer term perspective. Remember, we do have our bullish turnarounds list here. If you're wondering, well, what good is there for me analyzing a classic bullish stock? Well, again, you have 2 main benefits. You're training your eye for a classically bullish stock, and you have a real-time example here. Think about it if you're swing trading. All right. Many of you mentioned the overwhelming response that I saw earlier about 1 to 3 weeks or swing trading options. Well, wouldn't you rather take the opportunity for a classically bullish stock in a very bullish market when you have all these factors lining up in your favor? Don't you think the likelihood for growth is better in a stock like this in a bullish market rather than a neutral rated stock? Or maybe think about like an energy stock that's down right now. You know, the whole industry, the whole energy industry group is completely down. So why take a flyer when you're trying to speculate on a stock when you have data-backed information in front of you for a stock? All of this, again, done right for you, okay? Now, again, classic bears. Well, what if I'm thinking bearishly? You know, I see that the market right now is overbought. There were plenty of opportunities when the market was overbought. You know, show me the right setup for a swing trade here. Well, let's go ahead and talk about some of these other technical indicators. Now that you all understand, again, what we're focusing on primarily, we see these stocks that are qualified, they're below their long term, their power gauge rating is overwhelmingly either bullish or bearish. In the sense for bearish ones here, let's talk about these 3 technical indicators. So Chaikin money flow, again, institutional money, all right? So anytime you see green, you're seeing accumulation, obviously a bullish sign. Anytime you see red, as you can clearly see here, selling off. I'm going to skip over overbought, oversold. I know we referenced that earlier, but obviously relative strength, what we use here, simply enough, we're comparing a stock or an ETF. We're comparing its performance versus the SPY, all right? So as you can see here, the stock, if you had the opportunity to buy either the SPY or this stock here, BRS, odds are, or clearly, no odds here, the S&P 500 would have made you more money. All right, you had way further losses just by simply buying and holding, you know, a BRS versus the SPY. So in this case, where are we sitting? Well, right now we find ourselves in a bullish market right now. Okay, but take a look at the past few examples. Imagine being here in August. All right, August 11th. You're sitting here and you're saying to yourself, okay, well, again, I'm finding this stock here it's trending in the right direction, right? So I see it's overwhelmingly bearish, as mentioned down here at the bottom, well below its long-term average for a few months. Money flow is negative, relative strength, it's really underperforming the market, and now I find it in overbought condition, all right? Fantastic opportunity to jump into the stock, and you can see how the value plummets, leading into the correction that we experienced back in the middle of August. Now, what about getting out of the position? Well, here's the thing, these bearish stocks, you know, I mentioned earlier, I'd love to see growth or depreciation be a very simple straight line here. Fact of the matter is that's not the case. We've been dealing with a very volatile market. So rather, when you're looking to enter a position, by discipline, the ideal time is when you have all of these factors lining up, you have the right stock, and you see it in overbought condition, and then you have the swing right on down, and when do you close out your swing trade? Right here, when you see that the broader market itself is the stock itself is oversold. That doesn't mean that the stock is ready for a significant rally. That doesn't mean it's going to become neutral or bullish. Rather, it's just simply correcting itself for a bit. And you're back here in the beginning of September for another dip on the stock, as you can see, and then you're closing out your position. Now, remember, we're using a range here. All right, you can see these swings take place over 1 week, you can see them over 2 weeks, or even 3 weeks. All right, the key here is the expectation that you're setting for yourself. It's all a strategy. All right, it all goes back to a discipline. Okay, so plenty of other examples that we can go through here. Again, barred by the limit of time, we do have to keep on moving through. And then, of course, keep in mind, plenty of opportunities are bullish turnarounds and bearish turnarounds. So remember, no guarantees. All right, we're focusing on probabilities here. We're focusing on a strategy. All right. For a little bit of a teaser, we obviously have done some back testing. We got to make sure these ratings work. How have we done that? Well, we partner with NASDAQ. All right. What we've done, and what you're seeing, I know 1-year results from the close of the first quarter. We actually just updated our results from the third quarter. Haven't published them yet, but I do know the results are just what you're going to see here. All right. We took 3 of NASDAQ's benchmarks. All right. We took a large cap, a small cap, and a dividend. All right. And we simply enough, we had the power gauge rating manage them. and we compared the results. So as you can see here, the large cap, the small cap, the dividend, all three outperforming the NASDAQ benchmark because of the guidance of the power gauge rating. All right. So speaking of, again, let's go ahead and compare swing trades versus long-term entries. All right. One of my favorite stocks to display, again, not just because it's a great example, but I think there's a lot we can learn here. All right. This is a stock Assurant from the insurance industry group. All right. AIZ. It's a great stock here. I love it because you get the perspective both from short-term, intermediate term, as well as now long-term. Where's the right time to be entering Assurant? Chat in right now. Tell me if you think May 13th was the right time to be buying Assurant, or whether to be swing trading it. All right. I'm going to keep an eye on the responses coming through here, and I'm going to keep a very close eye on your questions coming through. I know there's a lot of attendees here, which is fantastic. Again, thank you for spending a part of your Saturday with me. Ultimately, what we run a review here, I want to make sure you have the opportunity to learn more about the product today. So I'll get to as many questions as possible toward the end, but just bear with me for a little while. In the meantime, I'm seeing a lot of positive responses, a lot of correct responses. Is now the right time? Our argument, well, power gauge rating was bullish. Price was above the long-term average. You had positive money flow, and take a look at the lack of depreciation. You know, when we're thinking bullishly here for Assurant, when it comes to money flow, you know, we have a lot of questions, a lot of interest in money flow. What's use it? Well, I like to take an inverse approach when it comes to money flow. So I'm thinking bullishly, and I'm saying to myself, where's the lack? You know, where's the negative money flow at? You know, you saw a lot of selling off between January and February, but here we are in April and May. You know, it might not be the most overwhelmingly strong run of positive money flow, but hey, it's a lot better than where it was, and obviously we want to get in on a classic bull before it's a classic bull. Same story with relative strength. Look at the improvement here early on. Now your key here, again, following a disciplined strategy, as many of you chatted out, you see that the stock is in overbought position at this time. Now look, if you're buying and holding for a long term, you don't really end up getting burned here. Pretty much just trade sideways. If anything, it's a moral blow. Now the key here, though, is if you are swing trading, you've got to wait for the right moment. Think back to the example, all right? For those of you who are picturing yourself as swing traders and you're looking for the right entry point, I mean, AIZ, take a look at the run it made between the middle of April and our date in May. All right, if you're buying the stock here, you see money flows great, you see relative strengths improved. It's pretty easy to be misled here if you're not using a strategy. All right, now rather you see the stock itself in oversold position. Money flow still in good shape, and I know you see a little bit of negative money flow, but hey, if we're looking for a long opportunity, take a look at the longer history of money flow here. You can see overwhelmingly still in much better shape. Relative strength has gone slightly positive. Our stock is still classified. It's still bullish for a month over its long-term average, and you see a nice little run here. So you're entering your position, you're looking to close as it becomes overbought, or you're holding onto the stock, and guess what you're doing? You're anticipating the volatility. Don't get spooked if you see the price going down a little bit. Rather, you see it can eventually maintain itself over the long-term average, it's oversold again, and you're in for a really strong run. Now, we're going to go into exit points in a few moments, but a quick way to define an exit point for longer positions, I should say. Your exit point for a long position, it's a classic bull that simply enough is no longer qualified as a classic bull. What in the world do I mean by that? Well, take a look at Southwest Airlines. We see here on the chart, this stock right up front on the 12-month chart might not say a whole lot to you, but when you pull up the 5-year chart, you can see that you quadrupled your money in Southwest over a 2-year period. All right, fantastic run. Again, really strong bullish market that we've seen over the past few years. But like the saying goes, all good things come to an end. All the great champions of the Colosseum eventually fall. All right, and here we are. Price eventually drops below the long-term average and stays below there, and our power gauge rating is neutral. All right. Now here's the great thing. One of the most common questions we receive, well, if I have a bullish stock and let's say on Monday it turns neutral, do I need to immediately sell the stock? Absolutely not. We just saw for Assurant, it took a couple of weeks. It took about 3 to 4 weeks before we found our entry point. Well, that 3 to 4 week period is a pretty strong rule of thumb for exits as well. Again, are we qualifying the stock? It's below its long term and it's neutral. This is not a stock I'm expecting growth from, okay? Look at Chaikin money flow. Again, let's take a 2-month view. It was really strong, but now it's starting to slow down. Relative strength, pretty similar story. But you see that the stock is oversold. Why close at 41 when you could close at 43? All right. Price is still below the long term. Power gauge rating is still neutral. Money flow is now negative. Relative strength is now neutral, and it's overbought. Make the argument against yourself. What reason do I have to believe that this stock is likely to grow? All right. Not much at all. In fact, for what we're seeing here, none. So you're out of the stock, you see the depreciation, and eventually, again, probability, from a bullish perspective, you want to be in the right place at the right time. Bearishly, you're avoiding the wrong place at the wrong time. Airline industry group breakdown here in the middle of May. All right, probabilities, not certainties. So I know we're getting close to time. We have a little bit more than 5 minutes, so I do need to skip along. Be aware, though, that we do have a global filter. So if you're wondering, well, I don't trade stocks below $10, or I'm trading options, I need liquidity. You can go right in here and set your global filter, and you can factor out those stocks that don't meet your preferred criteria. Again, all of this information here you can modify very easily. Let's say you're looking for 500,000 in average volume. Well, simply enough to go ahead and modify that, click Save. Okay. So the key here is remember all the support. If you're wondering, well, how do I make sense of money flow and relative strength if one is positive and one is negative? That's what our support is for. Okay. This is just a brief snippet of education that we provide for understanding the program and ultimately the markets. So while we're at it, since we are looking at a few examples here, for those of you who are trading options, I mentioned that we're making a lot of changes to the program. We're always upgrading. Part of this includes understanding different strategies, different option strategies to maximize your profits. We call this program Options Play. All right, it's a separate entity. It's a company that we partnered with, and what they do for us is they compare 3 separate trading strategies and give you a score for the likelihood of the profitability and the best strategy to go with. Now, it's a very happy marriage. Okay, you need to find the right stock within Chaikin before you execute your strategy. All right, so the key here is finding that right stock and then finding the strategy. Plenty more. There's so much in this program that you can modify. Again, I could do a whole 2-hour presentation just on Options Play. Unfortunately, I'm going to have to tease you a bit just by showing you that all this capability is here, and as you'd like, you can understand the strategy, how you actually apply the trade. So for those of you who haven't had the opportunity to learn options yet, obviously it's very complex, it takes time. Let Options Play be the solution for you. All right, all of this is included right within Chaikin Analytics. Okay. So we've reviewed entry points, we've reviewed swing trades, we've reviewed exits. Now, some of those other questions that I'm sure you're asking, well, it's earnings season. How can Chaikin Analytics help me with earnings? Well, as you can see, one of these Chaikin hot lists here are upcoming earnings ideas. Now, we have 4 other categories. What I want to show you ultimately, stocks that are reporting earnings in the coming week. All right. Part of our capability includes what we refer to as a portfolio health check report, where we analyze a whole variety of stocks, any list of stocks in the program. Think about your own portfolio. What would Chaikin Analytics say about your holdings? All right. Plenty of information, a review of the previous week, and what we love here, stocks that are reporting earnings in the upcoming week. Okay. You'll see which ones are bullish, bearish, neutral. All right. This gives you the opportunity to go ahead and analyze a stock more in depth and be prepared for the right trade. All right. Part of your subscription also includes a stock of the week pick right from Mark Chaikin from Market Insights. All right, giving you analysis for how to understand a certain trade. Mark loves earnings trades. Okay, earnings reports that are coming out. Huge fan of them. A lot of content likely to come. Again, everything we've reviewed today is part of your subscription. So coming forward, obviously we just took a look at our overall our filtering capabilities. As of November 7th, we are going to have a significantly detailed screener available to you. So whether you want to search for stocks based on the power gauge rating, based on different trends in money flow over bought relative strength, you can completely customize the content that's most important to you. You're going to see this again November 7th, about a few short weeks away. Toward the end of November, again, we took a look at the S&P 500. As you can see, we get a lot of benefit out of using ETFs, whether it's research or application. All right. Here's the live update of those sectors that we saw in the introduction. All right. Top performing sectors, bottom performing sectors based on the power gauge rating. Now, what we're going to have soon for you is a power gauge rating for our ETFs. All right. This will be available in late November. So 2 major upgrades that we're adding to our program. We're on a 3-week update cycle. So any kind of feedback that you have, if there's something missing that you want to see in the program, all of this is available to you. All right, so please, we're always taking your feedback. Obviously, your success is our success. I love my job because I get to work with people who want to learn. All right, there's probably no greater challenge that an educator or a teacher will tell you is a disengaged user, I guess you could say. The great part about it is that the more you learn, the more knowledgeable you become, the more money you make. All right, that's at the end of the day. So how do you get your hands on Chaikin Analytics? Let's go right back. We do have an offer for you guys today. Typically, what you'll see for Chaikin Analytics, let me know if you can see my PowerPoint. Subscription, a full year to Chaikin Analytics is typically $19.50. All right. Now, what we're offering for you guys today, over the weekend, between now and again, probably Monday afternoon, we'll offer you Chaikin Analytics at a $300 discount. All right, $16.50 for an entire year. What does this include? Simply enough, everything you've seen today. All right, the commentary from Mark Chaikin, different charts and indices. All right, different. All those different indices that you can look through, different stock analysis. Think about the training, all right? We've barely scratched the surface today. There's so much more information that we can do, all right? But the key here is understanding that we provide all this information for you, daily support opportunities. Check out our YouTube page. We record all of our sessions, all right? Now, where can you get it? ChaikinAnalytics.com/gladiator, all right? We do have a few sales associates standing by, so if you do have some of the questions, I know hopefully for the content I've covered today, I was able to answer some of your questions. Again, there's just not enough time, unfortunately, but give us a call. We'll be happy to answer your questions. Send us an email. Tell us a little bit about your background. How long have you been investing for? All right, tell me what are your needs? One of the most common challenges that we come across for a new subscriber, we need to find the right stocks to be trading, and I just can't find those entry points, all right? As you can see today, hopefully I was able to convince you that, look, we have a fantastic program for finding this. It takes a strategy. It's like riding a bike. All right? I don't think anybody's ever hopped on a bike and knew how it worked. But again, we're here to teach you, all right? I can tell you I'm very proud of the program we put together, all right? All the different themes we cover, whether it is trading options or buying and holding, a lot of great information for you guys. I love being able to speak with individual investors and especially for those who are looking to learn. And then there's no better thing than when you can actually profit from it, when you get to see the results. I have a fantastic job. It's a fantastic opportunity, and I'm really looking forward to working with you. So with that said, I'm really looking forward to getting in touch. Make sure to give us a call, send us an email, go right to our website again, Chaikin Analytics, ChaikinAnalytics.com/gladiator. So with that said, Reed, I want to thank you for this opportunity. Everybody in attendance, thank you for attending. I hope you got a lot out of it. And again, we're looking forward to getting in touch with you soon.